again, it's Sandra from Royal Page Atlantic and the Pike Group with Michelle Drover of Premier Mortgages. And it's Real Talk again. And what real talk do we have with the announcements yesterday? So I'll let you go with this, Michelle.
Hi, Sandra. So great to see you and be here today. Listen, we talked last month about obviously the Bank of Canada rate and the possibility that it would remain the same, and it has. So this is good news. They have not increased it. While a lot of people want it to have decreased, the reality is we're not quite ready to get there. But lots of consumers are breathing a sigh of relief, especially those individuals that have variable rate mortgages and or revolving.
Oh, yeah. So a lot of people talk about first-time home buyers. They don't want to be out there buying homes. But when I look at the stats here locally, 41% of the buyers that were out in February, the purchases were under 500,000. And when I looked at, let's say, all of what happened in 2023, I believe it was the lion's share was 48% of what was sold was under 500,000. So I don't think the talk that people are having about first-time home buyers, they're still out there. Like, they're looking at the rents that are here locally, and it doesn't make sense. So, I mean, what are you seeing with the mortgages coming in at Premier?
I have to agree with you. It's still definitely a first-time home buyer's market. I think a lot of people are waiting on the sidelines, Sandra, waiting for this continued good news economically. And I think that there's a lot of pent-up demand. There's no question. But we're finally seeing insured mortgage rates below 5% or 9%.
Okay. And speaking of that, I know CMHC had a great program out for first-time buyers, and they're stopping that March 24th, or has it stopped now?
Yeah, it stopped. But I will tell you, initially, it's like any program that's launched, there's pros and cons to it. And so it was where the government would, it was a shared equity program. So while they were providing a certain percentage of the down payment, they actually had ownership. They had shared equity. So in an increasing environment such as ours, where we're seeing market values continue to increase year over year, the government was benefiting, not the consumer initially. So it's not that disappointing, frankly, that the program is no longer in play. If you talk to many mortgage professionals right across the country, it wasn't the best program to begin with. It was something that our government, I believe, simply put out there to assuage us as consumers to say, hey, we're going to give you something to get into the home buyer market. But it really wasn't that great of a program. I think that, and I'm hoping that there'll be more innovative programs coming through. It'll be hard to say, but Sandra, there's also a really great program that works much like the RRSP program. As you know, people can, as a first-time home buyer, they can redeem up to 35,000 of their RSPs towards the purchase of their home. And they can take it out on a tax-free basis, but they have to pay it back within 15 years. That is a very popular program because it can help with all kinds of things, not just with the down payment, but moving costs, appliances, et cetera, legal fees, closing costs. We now have another program that was actually launched and spoken about a year ago on April 2023. And it's a tax-free first home savings account. Have you heard of this in the marketplace?
Yeah, I have, but not, I don't think my buyers would have used it a lot.
Right. So it's brand new, and you can use it in conjunction with the first-time home buyer RSP plan. Essentially, we can save up to $8,000. You have to be a first-time home buyer, have to be Canadian resident, but you can put up to $8,000 in this first home savings account annually. The growth is tax-free, so you can invest it much like you can others. This doesn't have to be in a savings account, could be in mutual fund, stocks, etc. And the maximum lifetime amount or limit is $40,000.
Okay.
If 1 year you only put in 6 and the next year you have additional savings, that amount can carry forward. So 8,000, right? So it's great. The other really great thing about this is when the potential home buyer takes the money out, they're not taxed on it. So, and unlike an RSP, they don't have to pay it back. So this is a very innovative program. You could potentially have up to $75,000 savings towards the purchase of your first home.
But so there's a lot of Canadian, and I mean, there's a lot of people here who our rents are very high. They have great credit, but they just can't get ahead to save. So while the CMHC program allowed for someone with no down payment, are there any other programs out here available right now in Nova Scotia for people that, hey, I know you have good credit, let's stop paying rent, let's get you into a place, like, is there anything like that now on the market at all?
There are down payment assistance programs, but my understanding is that the funds have been used up. And so
Yeah.
hopefully this budget, we're coming into a new budget year,
Mhm.
federally, fiscally, and hopefully some things will be launched, if you will, to the
So I
Canadian.
guess credit union doesn't have it anymore either?
Well, they have, that's different. So that's not provincial or federally run. It's the credit union has what we call a free down payment mortgage. So it's not necessarily free. Nothing in
Yeah.
life is really
Yeah.
free. However, they can, again, depending on the client's overall affordability qualification, they can lend up to 5% of the purchase price. It does have to be paid back, and the interest rate is somewhat higher, but it's available if someone need it.
And at least they can get in and stop paying rent.
Right.
Yeah, and they were on the news the other day talking about delinquencies. Are we going to see that here? Like, what's been happening with that, or do you even know?
Well, we talked on this subject previously, and typically the lenders won't have any reporting for delinquencies 30, 60, 90 days out. What we're seeing in other parts of the country, not necessarily here in Atlantic Canada, but we're seeing in Vancouver and Ontario, some delinquency rates. They're not astronomical. I don't think there's any need for our industry or our regulators to be overly concerned with that. But we're not seeing a lot of delinquencies still here. And this is a good thing. We don't want to see delinquencies. So people are still able to manage their overall monthly obligations, including their mortgages.
That's really good. On a different topic, when I look at our healthcare system and we look at people are aging in their homes, there used to be reverse mortgages. Is that still a thing now?
It absolutely is. And I'm so glad you brought this up because we have one of the highest aging populations in Canada, right
Mhm.
here in Nova Scotia. And the reverse mortgage used to have a lot of negative connotation. The product was very antiquated for sure. It has been completely modernized more to the borrower's needs. And it's really a fabulous product because what it can do is it can help people stay in their homes. They can take money out, utilize the equity in their home. And there's many different payment plans. They don't have to pay it back. It will be paid back when they, I hate to say it, but when they pass away, the estate will pay off the mortgage, and then any other accrued interest or payments will be paid along with that. And
Yeah.
or they can take money out in a monthly income. So they can create monthly income that's deposited into their account, and it's tax free. And it will help them continue to live in their homes with dignity should they ever need some sort of health care or home care. I mean, let's face it, we not only have a housing crisis in this country, we have a healthcare crisis. But the CHIP mortgage, Canadian Home Income Plan mortgage, is such a great product and tool to help aged individuals. And in Canada here, you're considered a senior citizen when you're 55 and above. So
At Shoppers Drug Mart, I got to be 65 for the record. I think it's 65.
no, it's 55, and I get to enjoy that discount in 2 months. But my point is that it is really a great program. There's a lot of misinformation out in the marketplace about this particular type of vehicle to help people. But we have often seen even senior clients or elderly clients that have a ton of equity that might not necessarily qualify at their bank because their income is lower. They could be on RIF income and OAS and CPP, but they have a lot of equity and they want to help their children or grandchildren get into a home, and they will take out equity through the Canadian Home Income Plan and gift it to their children.
I've
So
never heard of that. That's amazing.
it is amazing. And I encourage anybody that has any questions whatsoever about this particular type of strategy and mortgage to reach out to their mortgage professional. It's a great product.
Why isn't that being talked about more?
I think because there used to be a lot of stigma with that particular product.
That's
And the
great.
interest rate is higher for sure. The risk is higher. Anytime the risk is higher, the interest rate's going to be higher.
Yeah.
And it can cost a little bit more to facilitate it and set it up. Clients need to also get independent legal advice to ensure that this is the proper product that suits their needs. But there's a lot of stigma and used to be around this particular product. But again, it's an amazing vehicle to help whether you have family members or grandparents or aunts or uncles or your own parents that are in their home. It's been paid off. Their income has been reduced because they're no longer working. Their retirement income is lower. The cost of living is still through the roof here. We know that. But this is an opportunity to utilize the equity in their homes to have more disposable income that is tax-free. Thank God right now, the equity in our homes is still tax-free. If I want to refinance my house and take 50 grand out, I'm not paying income tax on that. So last kind of two vehicles.
I got a question now based on that. So am I right to say, let's say mom and dad now, they just want to come live with me and I need it to make my home more accessible for my parents, and it's going to cost, let's say for argument's sake, 60 grand. Can I use the, take the money out of their house to
Yes.
do the work on my house for them?
Yes, you can.
And then
And there's also programs we know provincially, right, that were just announced a few months ago to add a secondary suite or turn a garage into, has to be for a family member. And
Yeah.
depending on your income level and where you live, there's a certain amount that the government will provide back to a grant or like an interest-free loan. So you can do that. But Sandra, the other thing to consider too is that maybe it's simply a secured line of credit against the property that they may own, and maybe they qualify under traditional guidelines. But again, it's a really fantastic option out there.
I know it's hard to get a mortgage on a mobile home. Is it as difficult to get a mortgage for a tiny home? That's not, unless it's on a foundation or,
Well, it's a great and interesting question because we can see that that's where things are heading, right? We're seeing a
Yeah.
lot of these tiny homes and a lot of, I don't know, my nephew and my nieces, their age, they're in their 20s. They're looking at these tiny homes and they're somewhat transient, if you will. They can go anywhere, and that's when they're not tied down. Some of the banks will look at this as similar to mobile financing.
Mhm.
If it's not affixed to a foundation, so that's very important, right? It's not affixed to a foundation. It's not on a concrete slab. It can be moved. It can literally be hooked up to the back of a truck and moved from place to place. Typically, those are financed on what we call a collateral mortgage basis. So while it allows you the extended amortization to lower payments, the interest rate can be somewhat higher and it's not classified as a mortgage per se. And most of the banks will look at that. It's not very popular right now, but it is gaining traction.
Oh,
And then, of
yeah.
course, you have modular homes and you have some mobile homes that are affixed to a foundation, so they cannot be moved. And those certainly can be financed and mortgaged with the banks. And then you have mobile homes that are in a park, and that's something a little bit different. And there are fantastic lenders out there that have the market on mobile homes that are in a park where the individual is leasing that plot of land that their mobile home is on.
Great discussion today, Michelle. So when is it so we just had the Bank of Canada come out and stabilize the rates. When do we due to have another conversation?
Well, we can always have another conversation, but with respect to the Bank of Canada rates, we're looking at April the 10th. And we've got to move in April. I don't see it moving. I don't see it going down. I mean, maybe we can have a friendly wager over a nice bottle of wine or something, but I definitely don't see it going down in April. I see the Bank of Canada rate probably, hopefully, going down in the summer in June. That's when I see this happening.
And a lot of people are saying that if it's not June, maybe closer to the last quarter, maybe. It's hard to say,
Yes.
but it would be
Yes.
nice for June for sure.
It would be great, but I do see the market picking up, Sandra. There's a lot of pent demand. There's a lot of properties that are having multiple offers on, and we're very positive and optimistic going into this spring market. Absolutely.
And I can say, it's nice to be back to a regular market. That's what I'm seeing, and it's wonderful. So no,
Isn't it
I'm
great?
excited.
It's wonderful.
Yeah. Oh yeah. I mean, it was fun with COVID crazy, but just to have this stability now, I am for this all the way. Anyway, I won't keep you much longer. I totally appreciate your time. I know you're a busy lady, and thank you for always talking to me because I want to understand and be able to go to my own clients and say, hey, this is what's happening. So totally appreciating your time.
Oh, it's my pleasure, Sandra. Thank you so much.
Oh, thank you.